Hello guys, good morning. In this video I will try just to explain what is a correction in the market. Now in stocks, when they are like an uptrend, it means they are going up. They don't go up for 1 month, 2 months, 3 months without having small correction. Now some stocks, when they are so strong, they have most of the time 1 day or 2 correction. That's it. Okay, that's why some stocks, when you see a big trend going up, you try to see, you find 4, 5, 6, 7 days or more or less green, and then 1 day you see it red, and then after that you will see the same 4 or 5, 6 days which are green, and then you see 1 day or 2 red, and then it's the same. Okay, why this correction happens, and what's this correction that all the people they see, and maybe you have read about it and you see and you say, oh no, it's just a light correction. Correction is some people who are swing trader, they sell their shares because they don't believe that the stock will go forever. So they just begin in one, they stay 2 days, 3 days, 4 days, 5 days, 6 days, depends, and then in 1 day they begin to sell. Now when they sell, other people who put stop loss very near the price of yesterday, for example, they put it so near they don't know how to do stop loss, so they exit the trade, and the other people they sell. Okay, and if the stock goes up more, they will buy it again. This is why how the people they work a trend, an uptrend. This is the people how to work them. Sometimes we have what we call a big correction. The stock is going up for 1 month, 2 months, 3 months. It means with little correction, and then you see a big correction, many dollars going down. Okay, it's the same thing. Some people they buy for 1 month, 2 months, 3 months, and they have a time frame when they get too much money, because these people, try to understand that these people, they don't buy 100 shares or 1,000 shares. They buy too much. They can buy 50,000, 100,000 shares of stock that it is 100. So it's too much money. That's why I told you that big guys, they have too much money and they put too much money in the stock. It's not depending on their account. So this like big correction, what is it? It means you see an uptrend, the stock or an index going for a long time, and then 3 months, 4 months, 5 months, and then you see a big correction. When it goes down, you see a lot of red candlesticks that go down, and then it stops. This, when it stops, is called support, and then they go up again. And then when they reach the resistance line, some they go down, it means they can't make it, and some they continue the trend. That's why there are some people who are very successful in following trends, but they don't know how to pick good stocks. And there are some people who pick good stocks and they don't know how to follow a trend. For example, for you, sometimes, for example, you buy a stock which is a very good one. 1 day or 2, you exit the trade, although you are right, and the trade stays many weeks, 1 week, 2 weeks, and you see that much money that you left on the table. This is because you are a beginner and you don't know how to follow a trend. That's it. It means it's so easy, but it needs work. Now you should not be scared to stay long to make money, because in the market, if you don't stay, how can you make the money? Is it staying 1 day? Here I'm speaking about general condition of the market or of the stock. I'm not speaking about a gap up. For me, when there is a gap up, it means the stock was like 20 yesterday. Let's say today is 25 or 30 or something. I sell, and I wait. If the stock goes more in the following days, I will buy it again. Now this is my technique I use. Some people they use it, some people they don't. But I'm speaking here in general about general condition. You buy a stock today, 20. Today, tomorrow is 22. What do you think you can do? You sell the stock and you get this $200 if you buy 100 shares, or you stay for more. If you stay for more, you begin to understand the market. Okay? If you sell, what does it mean? It means that you are a beginner and you are scared of the market. And you say, oh, what if the stock goes down and I lose that money? Okay, it's not yours yet. Why you rush? When you rush, you don't make the money. You think that this $200 is too much. But this stock goes, from, let's say from 20 yesterday, today is 22. Now you sell it. You take this $200 and you say to your friends, oh, I have a trade, good trade, and I have $200. It's very good. Now after a few days, this stock from 20, it goes to 40. I'm telling you, some stocks, they are so rapid, so quick, so fast, because a lot of people, they buy this stock. And you tell yourself, how can I leave all this money to other traders and I exit the trade? You exit in the wrong moment. Okay? You are right in choosing the stock, but you don't know how to follow a trend. And this is a real problem in trading. So you should learn. There are techniques that you should learn in order to make the thing. 1 minute, let's just drink some coffee and then continue. Okay, so this is just a quick video just to show you what is a correction. Okay, a correction is just some people selling. It depends. You tell me how long does this correction stay, or how many dollars? It depends on the stocks. No one knows. If someone tells you that the correction is only 1 day, you just buy it, and when there is a correction, 1 day. But the people, they don't know. Who knows? Because the stock market, why the people, they don't know? Because it's the future, and it's unpredictable. You don't know what will happen. That's why I told you always, put stop loss. Don't trust the market, because the market are people who, they are not your friends. They don't know you. They just do what, like you buy going long. Some people go short. So it depends on the supply and demand in the stock. How can you see that? If you go to 1 minute chart, 1 minute, okay, just take 1 minute. You see stock going down, up, down, up. You say to yourself, why the people are buying up, selling down? I don't know. I don't understand why. This is the activity of trading from 200 years ago to now. It's the same thing. There is nothing changed. There is nothing changed. Day traders, they always trade. They buy, they sell, they buy, they sell, they buy, they sell the whole day. So this is their job. Okay? For us, like swing trader, we don't mess with day traders. Okay? We don't compete with them. We don't go and check our stock. Each 1 hour we see, oh, our stock's going up or going down. No, we don't check. We leave the market doing whatever the trade is. We think at the end of the day, is the stock going up or going down? If it's going up, we make money. If it's going down and hit stop loss, we exit. We don't care what the other people, or in the future what will happen. We don't care. Okay? So be careful of this what we call small correction and big correction. Okay? This is just to understand that the stock will never go up forever. It goes up, it goes down, it goes up, it goes down. When a big hand, like a mutual fund or someone else, big, he buys a lot from this stock for 1 year. One day, he decides to sell his shares. In few days, sometimes in 1 day, 2, 3, he sell all his shares. Why? He wants to get very quick with the profit that he has. For example, a stock that it was $10. This guy is a mutual fund. He buys this stock as $10, and in few days or few weeks he buys. He can't buy on one day because you see a big spike. Okay? So when he buys in few days, we as a swing trader, we understand his hands. We see his hand. He is buying because the stock is going up. Okay? It's strong. It's going up. Someone is buying. But this guy, when he buys and he stops buying, he will wait 1 year to see if other people are coming and buying, or other mutual funds or other traders or wherever, or they do advertisement in TV, or promoters, they speak about this company is good. Okay? So they do all this stuff. After 1 year, for example, he buys at $10. Next year it is 50. It means he has $500 for this stock. So what do you think, he will stay more? No, he wants to take his money now. So he will not tell the market or tell the news, or he calls the CNN, the manager calls the CNN, oh, hello man, I am the mutual fund manager of this, and I bought this stock last year at 10 and now it's 50 and I want to sell. Okay, this is good news for all the people, so ask them to short it. No, he will not tell anything. When it is done, and after a few days from 50 it goes to 30, for example, a big correction, and then it says in the news, oh, that mutual fund has sold his stock. Okay, and you see that guy who's in TV and showing, oh, we have made a profit of 300% or 400%. Okay, this is business. He will not tell you when he will buy and he will sell. Okay, and this is a secret. Understand that money is a secret. No one will tell you about money. Okay, there are specialized services when you want to do some business, you pay. It's not free. No free lunch at the market. In any business is the same. That's why we have competition. That's why we have companies that do competition. The same thing. They do competition. They don't give their secrets to other people. The opposite side. Okay? Understand that. Now, this is what we call correction. A big correction or small correction. So you can follow some stocks and you see how do they behave, but stocks are not the same because the people who buy and sell, they are not the same. Okay, so thank you very much. If you have any question, just write back. Thank you.